Thailand continues to attract more and more businesses thanks to its strategic location, business-friendly policies, and growing economy. But once your company is set up, there is one key responsibility you can't overlook, which is accounting and bookkeeping. Every entrepreneur who operates a business in Thailand must follow local accounting rules, and here's something important to keep in mind. Bookkeeping must be maintained in Thai language. This means that preparing financial statements without a local accountant or bookkeeper is nearly impossible. Financial statements must be prepared in the local currency, Thai baht. If your company is dealing in different currencies, maintaining the accurate exchange rates according to the rates of Thai Central Bank is a key element of accurate preparation of financial statements. At the same time, it is very important that your accountant is fluent in English, so you can clearly understand your financials, review drafts in English before final approval, and communicate easily about taxes, expenses, and compliance. Firstly, you should keep in mind that every private company limited by shares must not only maintain its accurate accounting books, but pass an annual audit as well. Audit is mandatory for all companies in Thailand, regardless of their size or activity. The audit must be conducted by a licensed Thai auditor. The good news is that Thai accounting requirements are quite straightforward. In most cases, you'll only need two main types of documents, which is bank statements and invoices. You must keep bank statements for all corporate accounts covering the entire fiscal year. These statements serve as the foundation for your company's financial records. Invoices and bills are important because every incoming and outgoing transaction must be properly recorded with an invoice. This includes both sales invoices and expense receipts, so make sure to keep them well organized. Depending on the type of the business, the auditor may request other documents as well, for example, delivery order to confirm fulfillment of supplier's obligations. Like in many other countries practicing international financial reporting standards, there is no fixed fiscal years for companies in Thailand. You get to choose your fiscal year period when registering your company. If you don't select a specific fiscal year, the default period will be based on your registration date. In other words, it will start from the first day of your registration month and last 12 months. For example, if your company was registered on June 15th and you didn't specify a fiscal year, your fiscal year will run from 15th of June to 31st of May for the first year, and each subsequent year it will be from 1st June to 31st of May of the following year. Knowing the ending date of your reporting period, you can determine your annual reporting deadlines. Once your fiscal year ends, your company has 5 months to submit its financial statements and audit report to two government agencies. The first one is the Department of Business Development, DBD. The second one is the Revenue Department. Submitting financial statements late to the DBD is standard penalty of 2,000 Thai baht, and in some cases, directors may face additional fines for repeated violations. Submitting financial statements late to the Revenue Department. If there is a tax payable, there will be 1.5% monthly penalty, based on the unpaid tax amount. The penalty starts immediately after the due date and continues until payment is made. So to avoid penalties and unnecessary stress, make sure your company's substantive accounting documents, like bank statements and invoices, are well kept and the financials are prepared well in advance and submitted on time. For some companies, monthly accounting and tax filings might be necessary. It depends on whether your company has ongoing operations in the Thailand domestic market. Generally, there are several criteria which determine if the company will need to file monthly reports. The company generates income in Thailand. It issues or receives invoices to and from Thai counterparts, has employees registered in the Thai social security system, or is registered for VAT. For example, if annual revenue exceeds 1.8 million Thai baht, or if the company is involved in international trade or services subject to VAT. In other words, if the company operates locally and it is registered for VAT, in most cases it will have to do monthly reporting. On the other hand, if your company is inactive, meaning no business activity, no employees, and no VAT registration, you won't need to submit monthly reports. However, you will still be required to file an annual audited financial statement and corporate income tax return. For VAT, it must be submitted by the 15th of the following month. For withholding tax, it is due by the 7th of the following month. If filing online, e-filing, the deadline is extended to the 15th. Social Security contributions must be submitted by the 15th of the following month. Overall, accounting in Thailand may seem complicated at first, especially with the Thai language requirements and mandatory audits. However, the rules themselves are quite straightforward and manageable as long as you stay organized and meet your filing deadlines. With the right accounting support, managing your company's finances in Thailand can be efficient and stress-free. If you need help with bookkeeping, tax compliance, or audits, feel free to reach out to us for professional assistance.